Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Alright guys, welcome back. It is me, the Ted, and I'm here with Bodies and Wicks, which is my thing. We don't know what a body and wick is. It's a candle. Duh. You know, if you're a trader, you know what a candle is. It contains a body and a wick, and that's how I got Bodies and Wicks. I'm just clever like that, guys. I'm just that clever, okay? Anyways, I haven't done well. I did a couple videos throughout the week. Primarily been focused on the Euro USD, a couple things on the pound. But today, right now, I'm gonna go over CAD, UCAD, and reason being is because I saw some cool stuff, and I think there might be a good trade this week. I haven't really traded the CAD since it did that really good that buy a couple weeks ago, where it just kind of took off and made a couple hundred pips, and then I haven't really touched it since, and I haven't really looked at it since. But I just knew that it had been going down, and since it had been going down, I really couldn't find any really good trades. So I haven't really looked at it, but I think we might have something to look at today. So if you're interested in trading the CAD, I'm not advising you to go out and trade with your own money. I am only here to give you information as to what I see in the market. And maybe it will help you see information that you would like to see in the market as well. Again, you know, with legal limitations, there's only so many things I can say. I'm not going to tell you to run out and trade your money. I'm not licensed to do that. I'm not a broker. I'm just here to give you insights on what I see, and give you information, and whatever you do with that information is up to you, and then hopefully you're responsible enough to know what to do. But anyways, enough of me rambling. I shall get to the charts in just 1 second. I know I should always have them pulled up, but like it always takes me a second. Because I always just forget what I'm doing for a half a second. But anyway, let's head on over. First, I want to start off with bar chart. We are in the October 20th future contract of the Canadian dollar. And as you can see down here at the bottom, this is what I like to look at. Or at least whenever you do make these things, I don't know if you've ever done this. If you ever go to bar chart, you can select a commodity. I'll start this with you guys, so in case you ever want to do this, because I did this with the euro, I did this with a pound. I didn't explain how to do it. So what you do is you find what you want to the commodity that you want to look at, which in our case will be the Canadian dollar, right? And then it pulls up a list of contracts, right? So it kind of tells you, you can kind of, I guess you can get a glimpse of the future of how the Canadian dollar could possibly be going. Generally, they're all about the same. The only one that's really dramatically different is the one that's right in front of you, right? See, most of these are about the same. There really isn't much deviation. However, the one that you really want to look at is the one that's currently in play. So we click on this one, right? And then what you want to do is you want to click on, it'll give you some cool information down here. Some people give you some good insights, things like that. But then what I do is I click full chart, and you definitely don't need, I think it said 5 year. Okay, so you don't need 5 year. The futures don't even go back that far. 6 months is good enough. 3 months is even good enough, but I do like 6 months. And then if they don't have it at the bottom, which it looks like they don't have one of them, well, they do have both of them. What you do is you add study. One of the studies that you add, right, is commitment of traders, right? Not traders of disaggregated or traders financial, just commitment of traders, right? And the next one you want to add is volume, right? And just volume, right? And that's it. What these two will do is it'll bring up these, right? Commitment of traders, what this is, right? It gives you commercials, right? Commercial banks, right? How they trade their positions, right? Large speculators. So these are with people with very large accounts. Could be hedge fund managers, things like that. And then small speculators. So me and you, people that have a very small account, but we have smaller accounts than millionaires and billionaires, or else we wouldn't be watching YouTube to try to figure out what's going on. Maybe millionaires and billionaires do watch YouTube. I don't know. Maybe a millionaire and billionaire is watching me right now and learning from me. That would be kind of cool. But either way, that's what this gives you. The red line is commercial. Green line, which is generally diametrically opposed, is the large speculators, and then somewhere in the middle are the people that just kind of don't know what they're doing. The people that have no money. So I'll try to bring this down a little bit. So what I look at when I look at these, right, is I look at the commercials. That way I can see what their net positions are. So it looks like in the Canadian dollars, the commercial banks, they went as what you would normally expect. They went long, right, up through here, and then right here they started going short. And you wonder why they started going short here, right? It's because they probably went short right here as soon as it hit this top, right? Because they knew it was going to get lower than there, right? So they had the foresight to see that it was going to get lower than this point, right? So they shorted on the way up. That way when it comes down, you make more money. I'm sure of course they put long in there too, but the thing is that this is the point to where they started lessening, or probably add it. Well, I guess you could say because they were long here and they started adding more shorts, right? So they were still adding longs. Don't get me wrong. They were just having less longs and having more shorts. That's all. Until they got to this week here, right? And this week they just boom, the bottom dropped out. And they went total net short, right? So they went net short throughout this whole week. Is actually, I would say the thing is that it calculates for like a week. We don't know day by day what they did. We just know that they were net short, and that that number is 4,975. Is that short, or I guess that's still long? Because I think the shorts is when you get negative. Because the large speculators were negative, so they were net short. So I'm not for sure where this. Oh, hold on. Am I on the right one? I think I went to this one. Maybe that's why. I'm only getting fractions of information here. It's not popping up as it usually does on my screen. It's being weird. I just want to know what this number is. Okay, so I'm going to look to the right instead of actually trying to rely on the actual indicator. Negative 14,562. I'm not exactly. I said this before. I don't know exactly what that number means. I think it can mean contracts. I don't. It definitely doesn't have a dollar sign by it, so it's not a dollar number. But I think it's contracts. As to as they're net short. Negative 14,000 contracts. So that could mean that they are 20,000 short contracts, but they have 6,000, long contracts, but they're just net 14,000, right? Negative 14,000. And what you also want to, because I saw the foresight of it going long, which indeed it did. And the thing is like I said, we don't know when, all of those came into play, but you can, if I was going to guess, if I'm going to put in a lot of shorts, I'm going to put it in at the lowest part possible, and that's probably what they did. I don't think they built in a bunch of shorts throughout, this long consolidation period. I'm sure once it dropped, that's when they started putting in, well, hold on, let's see here. Let me think about what I'm saying. Well, actually, never mind. I'm thinking backwards here. They probably did actually put in a bunch of shorts throughout this long consolidation period, right? Because right after that long consolidation period, what did it do? It shorted. So that's exactly what happened. So yes, they did actually put in a lot of shorts throughout this long consolidation period, because right afterwards it dropped, right? And then right after it dropped, what did they do? They lessened their shorts and they started buying up again. So the way to read the Commitment to Traders report is to think about it. It's usually about a week behind of what they've been doing, but it kind of gives you a sense of what they might do next, So they went, they were that short, and now they went, now they were net long, and they went just a little bit longer this past week, which is quite interesting. Am I on the right commodity here? I feel like I'm not. I feel like this is not the Canadian dollar. It is the Canadian dollar. Okay. But this is the futures contract. So also what you want to look at is interest rates. So what interest rates will give you is basically a sign of selling or buying in the future. If it is drops, that is a sign that it is a buy, right? If it rises, that is a sign that it will sell. So if we look up, right, and we see it drop, well, it did buy a little bit, but what happened is that it came up really high, and that was the point that was the sign to sell, right? So that little drop really wasn't much of the sign, right? It was the high rise up that was the okay, I think it's going to drop soon, so we might as well sell. So the rise up was the sign to sell. So once it sold, the interest rates went low again, and then more buying started occurring now that the interest rates have gone lower. So same, if you look at it back over here, again, rose up, and then once it rose up, it drops, so it buys. See, so anytime it drops, it looks, well, doesn't really look like a bought, but it was kind of buying. Either way, what I know is that when the interest rates go low is when you want to buy. When the interest rates go high is when you want to sell. That's basic premise behind interest rates. So if it goes high, you want to sell, which they did. Boom. If it goes high, you want to sell, which I guess at this point, I don't really know where they were. Well, they were probably up at here. And so if they did sell, they sold down. So yeah, that would have made sense. And then it looks like it kind of slid off and then went lower, and as it went lower, prices went higher and higher, and until it got here, had a little bit of a dip, which I guess you would have this indecision candle here. But that's how you kind of read interest rates. Anyways, now that we know this, let's go ahead on over to USDCAD. So the reason I got into USDCAD is I was actually checking out the weekly. And what I found in the weekly, because I wanted to see how things are going on during the week, was that, you know, we're getting definitely down near like these support levels that we've seen, you know, historically. And with the support levels that we see historically, you get order blocks, basically. Order blocks meaning as institutions sell off, right? They buy, you know, they buy as they sell because they know they're at a low point and it's going to go higher, right? So that's basically in a nutshell what an order block is. So if you look back here, we have December 30th. I'm not for sure what year that was, if that was this past year or what. I'd have to count the candles to find out, or actually just do this really quick. Yeah, it looks like it was just past year. So December of this past year was when we had this you know, kind of low, and that's normal. You know, you kind of get like these seasonal kind of things from, you know, usually from March until about June is when you usually see about buying, which that really did happen. And then usually somewhere around, you know, June to September is kind of I really don't know, but then September, December is usually the fall off, and then you see buying again in February a little bit, but this year we had a little bit of a different year, so that buying happened really quick. Anyways, back to the point on hand. I get off on rambling sometimes. We are at an order block here, weekly order block anyway, from back in December, right? And we just ran through that a couple weeks ago, whenever, you know, we had that all of a sudden explosive move up. So we had this explosive move up, right? And so that just tells me that and now we're back down to this area. So now we're back down to this order block area. I'm sorry if you think I'm going to draw trend lines and do this and do that. I'm not going to do that. I don't believe in trend lines. I believe in price points and things like that. Trend lines, anybody can put two lines together and call it a trend. It doesn't take a genius to do that, you know. It's like, you know, because honestly, if trend lines really worked, you know, and it was like, oh, I broke a trend line, but now it's about ready to break it again. But people are going to think it's going to bounce off this trend, you know, it's going to come down and bounce off this trend line, and that's what caused, you know, this move. That's not what's going to cause this move. It's not the trend line that causes this move, right? It's the order blocks that cause this move. So now that we are down, and what's funny is I actually drew a fib as well. So we have, first let's go back to this order block. I'm all over the place. We draw this order block straight across, right? And then we hit this last down move up, right? So they were on their way down, right? They were buying, and then boom, explosive move up, right? And then as we're getting down, we're probably not there yet, to be honest. I know it's going up, and it looks like it probably could take off, and it probably could. I mean, it probably could. You know, the way we've been seeing the weeks go the last couple weeks, like there really hasn't been any like Judas swings, as the Mr. Inner Circle Trader would call it, which, you know, the way the week starts off, you know, it goes up one way, and then it'll make everybody think it's buying, then all of a sudden it'll switch the other way, you know, or reduce that like, you know, in the middle of the night, you know, in the Asian session it goes up, and then London session it'll go down, you know, it's what they call a Judas swing. I really haven't seen anything like that happen, to be honest. In the last couple of weeks, it's been really interesting. We did see that a couple of weeks ago. You know, on the Euro USD, it was like a Sunday night, and you know, it was everything was going up, and then all of a sudden, you know, during the London session, the bottom dropped down and it just fell. So that was the last kind of Judas swing I saw. But until then, I haven't seen one. So we hit this order block, right? We go up for a couple weeks, right? And now we're coming back down. We came back down hard this last week on UCAD. It was probably one of the bigger. It was probably of the forex pairs. This probably had the most pips out of the week versus any other pair. I don't even think GBP USD had this many. 180.60. Here, let's compare. I actually have the GBP USD pulled up here. And GBP USD is the one that usually gives out the most pips per week. And I know I had a good run, you know, at some point, but I don't really know if it gave out that many pips. Here, let's go from the swing. I hit the wrong thing. I wish it would just stay on the one I want. Whenever I switch charts. So top to bottom. Okay, I had 204. How much does this one have? It had 180. Actually, I went from body to body. 224. So it looks like the CAD did actually 231. So at 231 to GBP's 204. So yeah, the CAD actually had the biggest change in direction, biggest pips. I think, I'm pretty sure, I haven't checked every single one of them, but I'm pretty sure CAD actually had the biggest drop of all of them. So, but what did it do? It came right back down into an order block, right? And the thing is that I don't know if it's gonna get lower, because it could potentially get lower before it starts trading higher, or we could have seen it already start the week off, you know, in this order block and start buying again. You know, a lot of charts are doing different things, you know. Hold on one second. You know, like the euro is buying right now, you know, so which is quite interesting. Well, euro's actually going sideways, but anyways, this is just a weekly chart though. So on a weekly chart, you would think it would probably get lower, just the way things have been going. But also, if you look at commercial traders report, I think, well, and this kind of goes to last week too. You know, it did kind of slide back into net shorts, but it slid back into net shorts over the last couple of weeks. Generally, I like to look at the COT report on a daily chart. So let's go back to a daily chart. So again, you know, they lessened their shorts here, right, and started going long. And they probably started going, you know, whenever again, it just gives it for the week. They probably loaded up on longs here, very bottom of this candle here, right, you know, of this week. Or actually, let me see. Yeah, they probably loaded up on here, and then as the week went on, they kept loading up on more. until they got to here. And then here they probably let the rest of their longs go. Right? They didn't need to add any more longs because you really don't need to add any more longs to 60, 70 pips. You just let those take over, and they're not going to scalp 30, 40 pips, which is why you see them kind of pull back and their nets kind of change in the direction a little bit ahead of time. Because let me see what that is exactly. Let's see. Their top, their longest of their longs is here. I guarantee you that long was actually probably put in right here, right? And that long came up to here. That's 184 pips. That would make complete sense to load up on a long there, and let it go 184 pips versus loading up on a long here, and then letting it go 80 pips. Who knows? They may do that too. They're greedy. They're commercial banks. They're central banks. Who knows? But this is the time where they started shorting, right? So they started shorting at this point, knowing that it would get below, this area right here. And of course, it is below that area. So now that it is below that area, what do? Right? So now, are we going to keep going down, or are we going to go back up? I think that's the main question everybody wants to know. So with UCAD, I think it looks like they have lessened their shorts, or they went shorter and shorter. Looks like they went a little bit shorter this week. See, and I'm opposite with the euro and the GBP, and the reason I'm opposite has to do with one thing, and I haven't brought this up yet actually. It has to do with the yields, right? So price chase yields, and I should probably set this. If I set it to auto and I set it back to auto, it actually just kind of makes it static. So here, the actual blue line here is the US dollar. The US dollar is the one that is trending up, and it is trending up probably higher than most. I would say the one just behind that is actually the Canadian dollar. So they're actually pretty close. They're actually almost running in tandem. So it tells me that they're pretty close in frequency, I guess you could say, or pretty close in yield. So the price is going to work closely together, basically. I didn't put all of them in here, but I did put some main ones in here. This one here, this is the pound. The pound is actually trading a little bit more aggressive. It did have like this swing, but then again, it did start going up. It's starting to come back down, but it does. Even though it looks rather bullish, because it does have like kind of this bull flag kind of going on here. So I do think the pound is eventually start going to go back up. That's why I think the pound is I think the pound is going to be a little bit more overtaking than USD. Plus the commitment to traders report has the pound on longs. We have this is the most interesting one, is the yen. Yen has just been it was going sideways, but it's slowly going up. The yields are going up. So like I said, price chases yield. So you might see some strength in the yen, coming. If not, it might just be static. But it hasn't, it hasn't done any like these huge like dips like these other ones have, Like instead of all these others made these lows, right? Made these big dips, and it made these lows. The yen didn't do that. The yen came up and made a small little dip, and then it kept going up. So there's some strength coming out of the yen right now. And lastly is I got the German, which would most likely represent the euro. I could put in some others to try to represent the euro, but the German is generally the closest one that represents the euro. And this one has just been kind of sliding off. So there's been less and less strength in the euro. That's why I am kind of bearish on the euro and more bullish on the pound. And then UCAD, I'm somewhere in the middle. But I think the dollar is got it just a little bit more. I think the dollar's just got a little bit more. So when we go back to UCAD, they haven't been aggressively adding shorts. They've just been barely adding shorts. See here, they aggressively added their longs. So when you aggressively add your longs, you know something's happening, right? So aggressively added their longs, and then boom, they had, you know, an explosion there. They are from this point to this point, they just really aggressively added their longs. But here, in this whole consolidation period, you know, they're just adding long after long after long after long after long, and then all of a sudden, if you know, what is this? If we get to the highest point, you know, 300 pips, you know, or something like that, or I would say even more than that, because if you're aggressively adding your longs throughout the whole week, 300 pips, who knows how many lot sizes behind they put that, you know, behind those pips. You know, central banks made millions and millions of dollars just off that week, you know. But now they're, you know, they're lessening, they're adding shorts, but they're lessening their shorts. And next week we could actually see this go up. And that's what I think is going to happen. I think we're going to see a rise in UCAD. And the reason being is going back to these order blocks, right? These order blocks are when they, you know, they sell, they're actually buying so they can go up, right? And I think that's what's happening here. I think it's forming an order block here. We're actually trading back into that order block to where they already have those buy positions, been holding on to those buy positions, right? So they're not going to let them get low. You know, the banks are not going to get stopped out. So, you know, they're not, they have the power to move the market. They're not going to let you stop them out. So they're going to push it up, right? They would let it get all the way back down to where they originally had sell positions. And the reason they would do that was to get rid of those sell positions, because they can afford all of this drawdown, right? If, you know, if they're selling here and it buys, they can afford that drawdown, right, to make all that money back, and for it to come back down and to get rid of that selling position that they had, and then switch it around and then buy, right? So this is the whole concept of smart money, trading with the banks and understand how they trade. So this right here is a bullish order block, right? Or, you know, so on this down candle, they're buying, and you can see it because these next two candles, boom, it exploded, right? And then consolidated, boom, exploded. So now we're back down here. Let's take a little bit closer look at the 4-hour chart, and let's see if we can't keep dissecting this thing. Let me get rid of this, and nobody sees it on my page. It makes no sense that it has that on there. All right, so that is where we are currently at. So if we look at the 4 hours, right, and we want to look at, what you want to look at is a quick move down before an explosive move up is what you want to look for. And that's what you want to look for in a 4-hour order block. All right, so here, down here, this is just a bunch of orders of them, you know, buying. That's all this is right here. Wouldn't really consider this an order block. I mean, I guess you could. It's not going to get down to this point. If it does, it's going to reject off. That's what this is. This could be considered an order block right here. Goes down, boom, goes right back up, right? This actually could be considered a bearish order block, because you could actually have sells in here, you know, as you're pushing this down. But generally, whenever you're selling down into a bullish order block, you're doing it because you want to buy, right? So as you sell, they can easily get rid of those sell positions while they're down here. It's not a big deal. But it's something like this, right? It's this right here that I want to put your attention on. These right here. Well, if I could get off this stupid thing. These 3 red candles. That is one massive order block, because the entire way down, I wouldn't say the entire way down, actually, the bottom of this is where they're actually picking up all of their sell orders. So if you look at the commitment of traders, they are net long actually at this point. And the reason they're net long is because they are buying in this area. So this is actually at the peak of their net longs. So because they're at their peak of their net longs in this area, once it comes back down to this area, it's probably going to buy again, because they're probably still holding buys in this area. If they're not holding buys, they're holding a sell, right, that they need to get rid of. That way they can place another buy order. So my thing is, especially when it comes to smart money, is that whenever you find one of these, the general rule is, or at least from what I've been taught, I've been taught this by iMarkets Live, not from ICT. ICT is another person that teaches smart money, pretty much the inventor of smart money. But the general rule of thumb is that you want to enter on the very top or just before the order block, right? That way you actually, get a good entry, or at least you make sure that you get a good entry. You set your stop loss just below, this candle, generally 10 pips below. I would actually go as far as putting it below here, though, just because of all this. This could also be potentially an order block, so it could, again, they do have deep pockets. Those that have bought here, right, they're deep in their buys, they could easily go all the way back down here, right, and rack up more buys, right, and then take off again. So I wouldn't put it past him to go down here. So I would actually say, this could be an area to where that they would like to buy in. So this whole area right here. So what I'm going to do is I'm going to see it. This is the first time I've actually really looked at this and tried to decipher what UCAD is doing and what I want to do about UCAD. But I'm going to try to draw this all the way across. See, we dipped down into it already. And that was last week. I wish I would have caught that. Well, actually, that was 2 weeks ago. Actually, that was a month ago. September 1st. We didn't get much higher, did we? No, we really didn't. I feel like those weeklies, they've just been falling the last 2 weeks. So maybe that was a wick. I don't know. Either way, it dipped back down into this order block, right? So now what do we look for? We look for another one, basically. Or you look for a setup in or around this order block. The thing is that I drew a fib, right? And the fib was based on the 4 hour. Or fib was based on the daily, I think. So now we are on the 4 hour. And what I generally like to do with these actually is get down to the nit-grit of them and get down to the 5 minutes. Because once you get down to the 5 minutes, you're a lot more precise with these Fibonacci's. But I may not be able to do it because this is a pretty large area that we are talking about. We're talking about a month's worth of data. And generally when it comes down to the 5 minutes, the wicks are part of that 5 minutes. So now's the time when I do want to have this magnet on here. So here's the thing, is that whenever you here would have been, well, first of all, your best buy would have been this one. Well, how would you have found that as your best buy? And I'll show you. What you want to do is you want to find an institutional level, either something that's a 50 is 0, a 2, or an 8, right? So closest one to this was 3,000, right? So your next best institutional level would be 12800. Which is this right here. Alright, so here's what I'm going to do. I'm going to see if this works. Well, this goes all the way back to March, so I'm not for sure if this is going to work. But let's pull this down. I'm going to get all these other things off of here. 2800. That is the closest point. Well, actually, wait, what did I say? It should be 2880. That would be the next closest institutional level. And then it would be a high based off of that. Now, what I'm guessing is that it's probably going to be the next swing high. I'm not going to guess it's probably going to be this high. I'm going to guess it's going to be off of this high. And that's why I need this again. And it gets a little bit too far down into there. Okay, so maybe these are not the best, but it could be the most recent swing high. Let me try that. So if we do go to an institutional level like 2880, and we do go to the most recent swing high, it does come down to almost a 70.5% optimal trade entry. So generally whenever you want to try to find an entry that's going to be in an order block, this is how you find it. Again, I'll have to go back and go through my studies again. I definitely would not suggest trying to put your fib way up there and then, because you're trying to find the entry within the order block, right? You're trying to find the entry within the order block. You don't just say, well, I'm gonna buy here and hope it doesn't get down to here. No, you want to try to find one specific place in the order block to get into the entry. So you find the most recent high that is outside of the order block. You find a institutional level, right? So in this one is 2880 and not 3000, because 3000 is actually going to be inside the order block, because you don't want it inside the order block, because then you're not going to have room to find one. You draw a fib from there to the high, and the most recent swing high, and there you can put a buy limit at the 62%. And as you can see, not only it would have gotten to that 62%, but it would have only had a drawdown of, let me take this off of here, 22 pips. So if we do a 30 pip rule, you'd actually got away with it. And you would have caught it going the other way. Now, we caught it going the other way. It did buy out of the order block. One thing you want to do is try to find another order block, or you do the same thing. You draw. You don't have to do, since we've already found a bottom, right? Since we didn't have a bottom over here. We did have a bottom over here, but going from this top, or from this bottom to that top, it was actually probably here was the optimal trade entry. And actually, you know what? Let's test that and let's see if that's true. I actually want to try something here. Well, it hit the 78.5. It hit the lowest optimal trade entry, but it did hit an optimal trade entry before it turned around and went back out. So these three levels, the 62, 70, and this actually shouldn't be 78.5. This actually should be 79. Hit that 79% perfectly, because generally things happen around, like I said, when we did the 2880, things happen around the 80% level, or the opposite, the 20% if we go in the opposite direction. So that's why you don't want to draw that fib from there to there, because you're not going to find an optimal entry inside of this zone, right? So that's how we did find the optimal entry inside this zone. Now that we found the optimal entry, unfortunately, I don't think it's going to come back. It could possibly come back down to this zone. We still have plenty of time. Week just started. It is Sunday at 11:30 p.m. Central Standard Time. So it is past midnight New York time, which is supposedly when the highs and the lows are set for the day. Right? We are on a 4-hour time chart. And right now, what has price done? It has come down. It has hit the 70.5 Fibonacci level. So this is actually an optimal trade entry. So if I was a smart man or a betting man, I would bet money this is actually going to continue. I don't know. It could swing down. If it does swing down, It's not going to swing down much lower. It's going to probably get down just to the 79% level. But if we look left and we try to find another order block, we find one. We find it right here. Let me see here. They're usually the last down candle before up. That doesn't have too many wicks before an explosive move. So it's actually, I think it would be considered this one. Oh, and look at that. If you do that without the wick, it comes down and touches that perfectly. So it looked like that happened on Friday. Not Friday. This is a daily chart. No, it's a 4-hour chart. Just the 4-hour candle hasn't come out for today yet. No, it has come out today. Just that there was only 4 hours on Friday. Wait, I'm confused. Oh, okay, never mind. Yeah, it was the last 4 hours of the day on Friday is when it happened. So it came down, hit that order block, and it hit it perfectly. And so now it's starting to go the other way. So now, if I'm just gonna do it. I am going to go ahead and do some paper trading. That's what I like to do. I'm going to do a market. I'm going to do a market buy because we're not too that far. Let me see how many pips we are out of. About 30 pips outside of, where that entry would have been, the entry tap. Let me put 3,000. 3,000 would actually be, I think it's a 0.03. It's really not that much money. So let's just say I put a 0.03 on here, and I'm just gonna go ahead and, well, actually, before I do that, let me get it a little bit closer to see what it's doing. Because if it's trying to go down, I want to catch the fall a little bit. Because what could happen is it could actually come back down and hit this entry on London Open. And that's something I would actually like to catch. Or it could just continue to take off. I mean, the thing is, as soon as the market opened, it looks like it gapped up, dropped off, went up, looks like it went down a little bit, and now it's just kind of consolidating. So the thing is that it's already hit that optimal trade entry, and actually it didn't hit it. It looks like it came really, really close. So what I want to do is I'm going to go back to this 4 hour. All right. And I'm going to another horizontal array, do another vertical. And I'm going to note that those are the two. And actually, I want to take a closer look at this at the 1 hour chart too, to see what happened. There it is right there. So it wasn't this point here. This is actually just driving down to get some buys. Right, so they're getting some buys here. Looks like they're getting some buys here. And then here was the last point to where it exploded. So this is your and look, there's no wicks either, and that's another way you can kind of tell it's a order block. Whenever it goes, especially from hour to hour, if there's no wicks, you can just tell it just went straight to sell the entire time. So as it was selling, the banks were pricing it as, you know, going lower. They were actually putting in buy limits, you know, buy limits to get down to a certain point, and then, you know, once it got to a certain point, it took off. Or they were actually buying, but they were buying in small amounts until they got down to the very bottom, you know, and the rest of the retail world was, because look what they did. They made it look like there was two highs, or they made it look like, you know, it was going to go the opposite way. So that's what they do. They trick you. You know, you see all these huge spikes up, and they make it look like it's going to go down. It's going to go down. It's going to go down, and then all of a sudden, it just explodes. So this is the order block here. So now that we know the precise order block, and I'm even going to go from wick to wick, because sometimes the wicks even matter these days. Anywhere in that area would be a potential buy. And we've already been in that area. So the thing is that they could have already released any kind of sell position that they had before, and then bought, and we could be on our way, or it could also come back and dip down and create a new I'm not 100% sure, but what I will do, and especially rule of thumb of smart money, is that whenever you find these types of candles, or that it's not going to go below those candles. You know, why would it go below those candles? They've already got their buy set in there. They don't want to go below that and lose any more money. But the thing is that they have buys here and they have buys here. But who knows? They could have already actually taken the profit out of those buys, and they left the ones on the top going. And so they may, you know, that way they can maximize their profit. You know, the ones that are the lowest, they're going to maximize their profit as they get to the top, so that the ones that they have on the highest, they keep those running. So that way when it comes back down to it, they can get rid of that sell position that they have and then buy. So I will actually place a market order. What I'm going to do is we're going to do a market buy and stop loss. I'm going to put it below, a little bit below this candle. I'm going to do it on an 800 level. Let's do it just below an 800 level, just because that's what markets like to go to. So let's do 30750 as the stop loss. $57 pips, a little bit more than I like to have, but then again, this is a high risk to reward because they take profit. Your first take profit is going to be since this did come down to the 7.5, it is going to be the top of this. So your first take profit is going to be at 1.34188. I'd like to do a 200 level, but considering it's short of the 200 level, I don't want to do that, and I'm just going to go straight for the 3 at 3,400. Which is 267 pips profit. So let's go ahead and market buy. And then now we know where our stop loss is. Now we know where our take profit is. And that is my outlook on GBP USD. And we will see how long that will take. But again, after taking a look at this, I missed the perfect entry, so why not try to get in it as fast as I can or afterwards. I'm going to try to upload it. I probably took too much time explaining it, because this could be into your guys' hands right now, and you could be doing the same. The good thing about this is that you can still enter, right? Especially if it's something like this, if something like this is true. You can enter at any time all the way up until you get to your 100% mark, right? The crappy thing is that it does have the potential to waver around, so you do have kind of a big stop loss that you have to make. So you just have to decide if the stop loss is going to outweigh your profit, but more than likely it is actually going to hit this take profit, because the thing is that it didn't make a lower low, right? It didn't. If we go to the here, let's go to a 4 hour, right? So here was the low, right? This did not make a lower low, right? So it did not break market structure, so it doesn't intend to go lower. Right, it came back up. Here was a swing high at one point, right? It broke that swing high, right? It came back down. Looks like we're buying now, and we're probably going to break this swing high. I would say next target level to shoot for is always your 127% level. So I'm going to try to take some off at this level, and then we're going to see if we can't get it to go to 1.3536 or 1.35 320, something like that. We'll see if we can get it to go to that level, but that may take a while, considering what we've seen right now. Is taken a month, right, for this to get back to the point that we want to buy. But this could be a potential big buy. This could be a buy again. Could take us, quite a few hundred pips. So we will see. But yeah, that is what I got for you on USCAD. I hope that made sense to you guys. And if you like what I do and you want to hear more, go ahead and hit that subscribe button. Get the alerts notification. Tell your friends, share it with them. Hopefully what I say makes sense. Mostly where I get my information from is a specific person that does have free YouTube classes, all over his page. It's called the Inner Circle Trader. That's exactly where I get most of my information from. I am not going to lie. I'm not here to plagiarize or take anybody's ideas. I'm just here saying that I'm simply being a student of what his teachings are, and I'm trying to put those into practice. So far, it hasn't led me astray, and hopefully it won't lead you. Hopefully what I'm saying won't lead you astray either. We're not always 100% right, but hey, at least we can, try to learn and grow in the market and see what we can do. That's what I'm doing. So that's what I got as far as USCAD is concerned. I'm going to try to get this uploaded as soon as possible so you guys can see it, and hopefully jump in this if you would like to jump in this on paper trading. I'm not suggesting that you go out and trade your own money. You should only do that whenever you feel that it is comfortable for you to do so. But I'll go ahead and jump off of here, and as always, keep your pants on. Just making sure you heard me right. Just keep your pants on, okay?